Hey, everybody. Simon Dixon here. Welcome to another Simon Dixon live show. It's that time of the week again. And today we're going to be covering 3 questions you need to ask yourself before selling Bitcoin. We're trying a different format today. So if you're in the live chat, welcome. With our retirement plan B clients, we've been testing out a piece of software which is really easy, requires no sign up. It's called Slido, sli.do. And Azad is going to be sharing the link and sharing the screen where you can get access to that. And what we're going to try and do, bit last minute, but we'll see if this works. It's been working incredibly well for our retirement plan B live sessions. But you get to ask questions there and upvote other people's questions. So rather than Azad just picking out the questions that he likes, we actually get our users to vote on what questions they'd like in the live AMA. Simon. So the format of this is I'll be doing the content.
Simon, can you hear me?
Hello?
Hi, sorry to interrupt. Sorry, everyone. Simon, can you do me a favor? Just allow me to share the screen on Zoom so people can see the QR code that they can start just pointing their cameras and get everything started. I will be giving the link in the chat for people to be able to use as well.
Okay, so Azad should be able to share his screen now. And there we go. So that's the link. If you go to sli.do and you type in SD1 or you just scan that QR code, that will take you over to the page where you can ask your question and you can upvote other people's questions. So without further ado, let's get straight into the content part first. What we're going to be covering is the 3 questions you need to ask yourself before selling Bitcoin. So if this is your first Bitcoin bull market, congratulations, welcome to the ride. It's a wild ride. You're probably feeling exuberant when the price goes up with all sorts of FOMO, fear of missing out if you didn't buy it. And then when the price goes down, you're probably thinking to yourself, oh, if the price went down, I would have bought it. But then when it does go down, everyone tells you how Tether is a scam and it's going to kill the price of Bitcoin, or Craig Wright is Satoshi Nakamoto and he's going to kill the price of Bitcoin, or whatever the fear, uncertainty, and doubt and FUD is for that moment to try and get you to sell your Bitcoin. But just before you do sell your Bitcoin, if you got your Bitcoin, if you got on the ride, then there's 3 questions you should always ask yourself before you do sell Bitcoin from my experience. So let's jump straight into those 3 questions. And then remember, we will be doing a live AMA so we can answer your questions. We'll try out the Slido side, sli.do, ask your question there, upvote other people's questions. The link will be in the live chat, or you can put in SD1 when you go to sli.do, and we'll see how this works. So the first question to ask yourself, and these are really simple questions, but they should be pretty thought-provoking for you. The first is, what will I buy? And so when people ask me the question, Simon, are you going to sell some Bitcoin? When are you going to sell? What are you going to sell? I don't think of it in terms of selling. I think of it in terms of, what will I buy? And the reason that that's an interesting question to ask yourself, it triggers a little thing in your brain to think slightly differently. So when I think of the world, I think in terms of speculation, and whatever I'm holding is a speculation. So if I decide to sell my Bitcoin and buy some dollars, then I know I'm either going to have cash, and I'm going to have to figure out how to sell it for cash, which isn't a fun prospect because that requires going and meeting somebody, putting your life in danger, or figuring out a Bitcoin ATM machine, and then it goes into some kind of wallet, whatever, the paper wallet or wherever it might be. Not a fun prospect selling it for cash. So then what happens? Well, I'll probably be purchasing some dollars with it. And if I buy some dollars, I'm not selling Bitcoin, I think of it more as buying dollars, then I've got to ask myself, what am I going to be doing with those dollars? Or what am I going to be doing with those pounds? Or what am I going to be doing with that Japanese yen? Or what am I going to be doing with those euros? Or what am I going to be doing with whatever currency it is for you, Aussie dollars, Canadian dollars, wherever you are in the world? And I'm not your investment advisor, and I can't give you investment or financial advice. But if you're thinking in terms of what you're going to spend, then you're thinking of Bitcoin as a currency. And therefore, if you're thinking of it in terms of a currency, you're probably mixing your spending money with your investment money. And that's the first rule of investing, is separating your investment money from your spending money. Because your spending money is what I call in retirement plan B lingo as a security bucket. And a security bucket is an amount of cash or cash equivalents that you hold in order to meet however length you want to have security for. And so the more in your security bucket, the longer you can go without ever having to sell down any of your investments or your assets in order to meet your living expenses. Now, the challenge for most people is they're not in that position. Their investment funds and their security funds are mixed into one thing. And therefore, whenever they're thinking about what they're going to buy, if they sell their Bitcoin, they're thinking of it in terms of goods and services. Maybe you've done really well. You're thinking for the Bitcoin Lambo. Maybe you are just thinking in terms of covering your rent, purchasing your house outright, whatever it might be. These things should really be separated and treated separately, because Bitcoin, as you are experiencing right now, is useless as a medium of exchange and unit of account, because most likely what you want to buy with your Bitcoin is not priced in Bitcoin, and therefore you have to become a trader just to figure out when to buy, when to sell. And if your rent is due at the same month that Bitcoin, or the same day Bitcoin is crashing, then you might not be able to cover your rent because your rent comes in your local fiat currency. And so therefore, I've seen many people over the decades that ended up with no Bitcoin because they're trying to meet their living expenses, earning Bitcoin, and then meet their living expenses. And every month they're selling down their Bitcoin in order to meet their living expenses and never get ahead of the curve, because they're at the mercy of the market. So if you're thinking about what you're going to buy in terms of consumables, in terms of that, then you are not separating your investment money from your everyday money. So then the next thing you think about, if you're beyond living expenses, then maybe you're thinking about what you're going to buy. Maybe you're going to be buying some gold. So what I want you to think about when you're buying gold with your Bitcoin is what you're doing is you're exchanging what I call a speculative store of value. So Bitcoin, I've defined as a speculative store of value. I believe I was the first one to ever use it. Many people have used it since, that phrase. But Bitcoin, gold has stood the test of time for 5,000 years. If you watch my free video series at retirementplanb.com, www.retirementplanb.com, you would know that, hold on, I'm thinking, have I done my, where's my video? I can't quite see what I'm looking at right now. Okay. Okay, anyway. Azad, are we on the close-up shot or the long shot? I didn't even look. I can't see the camera at the moment.
We're on the close-up shot.
Okay, cool. All right, wanted to get a bit more intimate. So if you're thinking of buying gold, Bitcoin's what's known as a speculative store of value. On the 4-part video series, I talked about how to think about these different buckets. So gold has stood the test of time as a store of value. Now, a store of value doesn't make you wealthy. A store of value is designed to preserve your wealth, to protect yourself from assets that depreciate in value by holding an asset that has a stable purchasing power. And gold is the only asset that stood the test of time, 5,000 years, few more assets, but gold is that one. Bitcoin's what's called a speculative store of value, means that it doesn't work as a store of value at this stage. But people believe that as the liquidity grows and as the utility grows, that Bitcoin can act as a store of value in the future due to its fixed money supply and due to its utility in giving you the ability to own your own money and spend your own money. But people are speculating on that because the vast majority of the world don't think of it that way. They think of it either as a Ponzi scheme or a scam or a currency just for drug dealers, or a get-rich-quick scheme. But more and more people each year realize that it's not a scam, not a currency just for drug dealers, not a Ponzi scheme, and not just a get-rich-quick scheme. And therefore, more and more people start to join it, as we're seeing each year. The number of people that own Bitcoin increases as the market cap goes $1 trillion and beyond, like we saw in recent times. And as more and more people do that, eventually it can perform as a store of value. And then, because it has more stable value, i.e. preserves your purchasing power, you can think of it then as a unit of account and medium of exchange at that stage. But for now, it's a speculative store of value, speculating on when it will become a store of value. And then it becomes not a wealth creator, but a wealth preserver. So if you are stating to yourself, I want to sell my Bitcoin and buy gold, you are saying that I want to get out of speculative store of value and into real store of value. And that's really the decision, which is I'm foregoing wealth creation for wealth preservation. And most people would make that decision simply because they want to de-risk and they are completely happy with the amount of money that they've made, and they just want to protect its purchasing power rather than increase it. So that's the reason that someone might make that decision. And so you got to think about what your stage of life is and what you're doing. The other thing is buying fiat. And if you're buying fiat, remember, we separate our investment funds from our everyday living expenses. In our investment funds, holding fiat is long-term suicidal because every single fiat currency in history has failed, and they are designed and engineered to go down in value. So what many people do is they save in fiat. And when they save in fiat, they're holding an asset which has both bank risk, bail-in risk, the risk of the bank and the risky loans that they're taking, plus it's designed to go down in value. So if it's your investment funds and you're selling your Bitcoin just to hold fiat, you're either a trader and you're trying to speculate, or if you're an investor, you're making a suicidal decision, which is giving up speculative store of value for something that is guaranteed to decrease your purchasing power if saved over time. Other people will be thinking about, well, maybe I want to lock some of it up and I want to do something a bit more exotic, like wrap it into the Ethereum blockchain and then do some DeFi and do some lending and earn some yield on it. Then that takes us to the second question that we're going to cover in a bit, because you are creating yourself taxable events every time you do that. So every time you shift the form of Bitcoin into something else, that's what's known as a taxable event depending on your jurisdiction, which brings us into the second question. But maybe you're also thinking about, well, I want to buy some of that Bitcoin and I want to put it into real estate. And so you are foregoing speculative store of value, fixed supply, and you're deciding that you want to put it into real estate. Now, you might do that because you want to buy your own house, for example, to live in which case you're giving up speculative store of value for security. But if it's going into some kind of real estate investment, then you're really analyzing the return on your speculative store of value versus the returns and you can get on the real estate, plus realizing a taxable event to do that. Also, maybe you're deciding that you want to go higher down the risk curve and you want to take your Bitcoin, which is the Class A collateral premier asset in the cryptocurrency industry, the only cryptocurrency that I consider the world's best shot at ever achieving sound money. And maybe you're looking at going further down the risk curve, trying to achieve higher returns by buying something a lot more exotic, like an alternative cryptocurrency. Well, at that stage, you're speculating on whether any of these alternatives, and very few of them have, are going to go from just pure speculative value to utility value. And the utility of Bitcoin is that people use it to own their own money, spend their own money, and that they use it as somewhat of a store of value, even though it is a speculative store of value. And so you're going further and further down the risk curve in making those decisions. So that really brings us into question 2. Once you've made that decision about what you're going to buy, whether you're separating your investment funds from your everyday living expenses, this brings us into question 2, which is, what taxes will I pay? And I'm not your tax advisor, and this should not be seen as tax advice, but every time you sell Bitcoin or you do something with Bitcoin, you should understand the tax consequences. Here's why. Not many people knew the tax consequences of Bitcoin in the past. And when it was worth a few $1 million a market cap, as the journey that I've been through over the last decade or so, not even tax advisors or tax authorities would not really know how to treat it. But now, over time, tax authorities have got pretty clear. And there is one global trend, and that is governments everywhere are broke. And they need the next big tax grab. What's likely to be the next big tax grab? Well, rather than make Bitcoin illegal, as many people are speculating, they think, oh, but won't the governments just make it illegal? Well, a better strategy for most governments that are broke and are looking is to find the next tax grab. And so that's why the trend has not been in making Bitcoin illegal. It's been in regulating the financial services providers that are onboarding and off people into and out of Bitcoin, which is mainly the exchanges. And so the exchanges have to collect all this data as regulated institutions, and tax authorities are waiting for Bitcoin to be worth $1 trillion and beyond, for example, so that then they can subpoena and tell all these exchanges, give us all your data, because we're going to compare that with all the tax returns that have been filed where people didn't declare those assets on their tax returns. And we're going to go for the next big tax grab, which is this asset classes that is going from a few $1 million, a few $1 billion to a few $1 trillion. That's where we're at in the Bitcoin space right now. So if you're sat on a big gain, then you probably want to be getting your tax advisor at this stage. And one of the things we've been working with in Retirement Plan B is making sure that they're getting the structuring correct in order to actually make sure that their future is done in a more tax efficient way. So the question you have to ask yourself is, what are you going to do? So you might be deciding, well, I'm going to take some of my Bitcoin, I'm going to buy an altcoin. Well, not tax advice, but most tax authorities would consider crypto to crypto as a taxable event. And the way that most tax authorities are thinking about it, again, you might live in a tax efficient jurisdiction, which brings us into question 3. But if you don't live in a tax efficient jurisdiction, then going from crypto to crypto in most jurisdictions is considered a taxable event. And the way that they treat it is they think about, even though you're going, for example, from Bitcoin to, let's say, Ethereum, the way they tend to treat it is they say you are taking your Bitcoin and you are selling some fictitious fiat. So let's say you're in the United States. They will take a US dollar value of that Bitcoin, and there'll be some fictitious fiat, even though you're not buying any fiat, you're not selling your Bitcoin fiat, and then you're taking that fictitious fiat and you're buying some Ethereum. And so they would take the dollar price of your Bitcoin and the dollar price of Ethereum, and you would use those, and you have realized a taxable event in many jurisdictions where you've taken your Bitcoin, and this might be sold at a loss. So you might be able to use it in your favor, depending on your tax position. This is where a bit of tax advice comes in, because you are selling your Bitcoin, realizing a capital gain if it's a gain, and then you're making a new event, which is purchasing some Ethereum. You record that, and then you have realized a gain just by going crypto to crypto. The other thing you might be thinking about, well, maybe I'm going to lock in its value and I'm going to put it into a stable coin like Tether or USDC or DAI if you're pretty DeFi savvy. And then that is really, in most tax jurisdictions, just treated exactly like if you sold it for fiat money. And so therefore, by converting from Bitcoin into a stable coin, you have realized a taxable event. And in most jurisdictions, they'd expect you to be putting that on your tax return. And in many of the forms in the future, they've started putting tick box where you have to say, do you hold any crypto assets? And if you don't tick it and you do, then you need to certainly get not just a tax advisor, but a tax attorney at that case, depending on what happens and where things go next. So the next thing you might be doing is you might be thinking, well, could I lend it perhaps? Now, in many jurisdictions, again, not tax advice, the act of lending it is not considered a taxable event. Some countries, however, might consider it that you are selling your Bitcoin and entering into a lending agreement, and they might treat that as a capital gain in exchange for entering into a new debt agreement or entering into a loan agreement. But when you receive the income from those loans, so if you're using any of these crypto income services, then that is normally, depending on the treatment and how you set it up, income, and therefore is taxed as income and should be added as income on your tax return if you're considering lending it. The other thing, the most common thing that people might be doing is deciding to cash in because they want to purchase on a Bitcoin debit card or something like that. So they are converting at the point of using the debit card into fiat. And some countries might have the tax treatment. This is where how Bitcoin is classified becomes important. Because if it is classified in your country as a currency, then these are not necessarily taxable events, but most countries have considered it an asset. And therefore it's like selling down property. You're selling an asset, you're making a purchase, and therefore you're creating those taxable events, which is normally, depending on your jurisdiction, subject to capital gains tax as you spend those. But most people convert it into fiat, and therefore they're pulling in all that data from the exchanges based upon the exchange that they're actually converting into it. But as I said, you want to get yourself an understanding of how it's actually treated. But when you're trading, this is one of the real reasons not to be a trader, is because you are creating thousands of taxable events every time you go from one crypto to another crypto, to one crypto to a DeFi solution, from a DeFi solution into a crypto lending platform, and then purchasing some of it and selling it on your Bitcoin debit card. And really, you're creating lots and lots and lots of taxable events for yourself and the consequences that come from that. So question 2, so just a quick recap. The first thing is, what am I buying? So if I'm thinking of selling Bitcoin, what am I buying? The second question is what tax consequences are of selling. And then that brings us into the final question before we go to the AMA section, which is question 3, where am I when I'm selling it? So if you are in a non-tax efficient jurisdiction and you haven't structured it and you've held it in your individual name, then you have all the consequences and all the things you need to do on your next tax return. Now for this one, again, I'm not your lawyer and I can't give you legal advice, but really thinking about where you live if you're sat upon these huge gains is something that becomes really important. And that's why you're seeing a lot of people in crypto relocating. Now, what do you need to consider when relocating in order to create a taxable event? Well, you need to make sure that you're no longer tax resident in the jurisdiction that you were avoiding or you're moving in order to make a relocation strategy. And there's a few things you need to consider. The first one is exit taxes. So most countries, fortunately, do not have an exit tax, but some do. And so if you decide to relocate and move to a more tax efficient jurisdiction or decide to make a move, then you need to investigate the exit taxes in your country before making that decision. The first one is countries like, there are some countries where they would just, you'd have to pay even if you become resident somewhere else, you can't actually exit the tax system. You end up having to pay an annual fee. Not many countries do that. There are others, such as Canada, where they say when you leave our country, you have a wealth tax, which is you pay capital gains as if you were selling all of your assets before leaving our country. So if you're deciding to relocate to Canada, have it be known that they have an exit tax, for example, in that country. And so as you cross that border and relocate, you have to consider the complete value of all of those assets that you hold, and there will be capital gains liability, even if you didn't sell, just for leaving the country. Other countries like United States, they'll say the only way to do it is a couple of ways. You can have, you can move to a jurisdiction that we have some kind of tax treaty agreement, for example, Puerto Rico. Or if you move anywhere else, we do not care. You are a US taxpayer forever unless you relinquish citizenship. And if you relinquish citizenship, there will be tax treatment for relinquishing citizenship so that they don't have the wealthy leaving. And so the options are limited, and you have to then start thinking about tax efficient structuring. And there are many different tax efficient structures that you can do in perfectly legal ways in order to really plan your affairs, whether it be through retirement plans, whether it be IRAs, whether it be moving to jurisdictions that have agreements with the United States, or whether it be through using offshore different types of structures and various other things. Other countries are a bit more fortunate where they just let you leave. And so they will just have different treatments of what makes you considered to be a tax resident in that country. But once you figured out the exit tax and how to cease being a tax resident in that country, and any consequences along the lines of that with your tax advisor, then there are several countries which many crypto people are exploring right now. One of them is the United Arab Emirates. There's a lot of crypto people that are in Dubai right now, just simply because the capital gains tax-free environment and income tax-free environment has made it pretty attractive for people if they can get out of their jurisdictions and they can do that in a correct way and make the correct switch. Others that people are looking at for the ultra wealthy are Switzerland. Is a little bit trickier to get into Switzerland. They do have an annual wealth tax at the time of this recording. And so you need to consider what the consequences of the annual wealth tax is if you're going for somewhere. Other countries, for example, Germany, they have really interesting where if you hold your Bitcoin for more than a year, there actually is no capital gain tax liability. Other countries that do things like that are Portugal as well. So remember, you're going to have to check the government websites. This is just from the research and people that I've known that have made these moves. And so there's certain countries where if you hold it for more than a year, you don't actually get those tax consequences. Another one, for example, is Malta. Malta, they have no capital gains tax on crypto that you hold for more than a year from last time we researched, but you will have to, if you're non-European, pay a minimum tax of 15,000 euros as a non-European that's relocating to Malta. Others in Asia, you've got jurisdictions like Singapore, which is no capital gains tax unless you're a frequent trader. Again, a lot of these jurisdictions, they penalize trading. And sometimes if you're trading really frequently, it's actually treated as if it were your job. And therefore, there's different factors that you will be figuring. But Singapore, if you're not a trader, then this is a very favorable jurisdiction. Other ones are Malaysia. And also in Malaysia, they actually don't charge it because they treat it more as a currency in some cases when you're doing transactions. So this becomes favorable. And although there is a very strange scenario in the national security level in Hong Kong, Hong Kong is still a top jurisdiction whereby they only tax your local income. There's no capital gains if you hold it for more than a year. And they also do not tax your worldwide wealth, which is one of the only countries left that actually does that. And of course, if you are American, the options are limited, but Puerto Rico is the favorite spot for those that have generated significant crypto wealth, are American, and looking to do relocation. The good thing is it's completely legal if you do it in the correct way. And you might want to research something in the US called Act 60, which is an agreement for that. And then there are other jurisdictions, for example, Oman, where they have tax caps, whereby you sometimes you're better off paying some tax rather than no tax, because when you pay no tax, you end up in a scenario where all the other countries that you're transacting in or visiting try and claim tax jurisdiction over you. And therefore, when you have a tax number and you can demonstrate that you paid some tax, you can find yourself in a better situation and not so bad. So these are the three questions that you should always ask yourself before. Most people are just looking at Bitcoin and saying, well, I like the price. Should I be selling now or should I be holding? Well, the hodlers are always rewarded. And so those are the three questions to ask yourself. The first one is, what will I be buying? The second one is, what are the tax consequences? And the third one is, what location am I living in? And what is my tax treatment when I'm actually selling? And so I hope that gives you some food for thought. As a rule of thumb, traders always get punished. Traders always get penalized. And investors tend to be the ones that win because they have the ability to set up more efficient structuring and the things that we've been working with on our retirementplanb.com clients at the moment, so that you can set up and really just relax, knowing that you've done things in the right way and legal ways. And so that's all the content I've got for you. How are we doing for time? Exactly, so 35 minutes past. Azad, are we going to give the Slido a go so you can share the screen? Yep. And maybe there's some questions that are there and we can do some upvotes. I do need to reiterate, I'm not your investment advisor, can't give you financial advice, can't give you tax advice, and can't give you legal advice. But these are some of the things I see.
So can you see the screen?
Yeah, I can see the screen now.
It's good. So as we get everyone familiar, because we've got our regulars who are probably wondering why we're not taking questions from the chat, but we'll be using this format as it does work well. So we've got 61 questions.
Wow, awesome.
Which is pretty good for a first start. So should we fire off with the first one? Yes,
please. So how many upvotes have we got on the top question?
First top question from Anonymous is 13 upvotes. So awesome. What people need to understand, those who are not familiar with this, just basically get your camera, point it to the QR code on the top left corner, or literally go to the website Slido, which is sli.do. And then you'll see each week, you're going to see that the hashtag is going to change. So we're starting with SD1. Next week's going to be a different one as well. All right, so let's go.
Awesome.
With the first.
And so the main benefits, just for that. Also, if you enjoyed this content, please hit the like button. Please hit the subscribe button. When you hit the subscribe button, hit the bell symbol and all. And every time we go live each week, YouTube will give you a notification because there's lots of stuff happening in crypto. But the reason we're moving to this Slido is because we were just picking out random questions, but at least here everyone can upvote. So Azad, let's take the first question.
Yeah, democracy always wins, right? Well, it should. Okay, let's share the screen. We've got over 1,000 people watching right now, which is brilliant.
Brilliant.
All right, so a question from Anonymous with 16 upvotes. Just sent my gains to BlockFi. Good idea, people?
So the question is BlockFi, and so just to make you understand how I think about that, when you take your Bitcoin, and it depends which currency you're lending, you could have exchanged it to a stable coin, You could have exchanged it to ETH. You could have exchanged it to Bitcoin. You could have exchanged it to something else. If you did the exchange, you've normally created yourself a taxable event. But if you just take your Bitcoin and you are lending that Bitcoin, then in some jurisdictions and in most jurisdictions, they wouldn't consider that a taxable event. But what you have done is you have taken Bitcoin that you own, if you own the private key, or maybe you didn't own it, maybe you bought it from an exchange. Therefore, if you hold it as an exchange, then the exchange is holding the private key. You're not. And then you're sending it to BlockFi. And when you send it to BlockFi, you may or may not be creating a taxable event. In most cases, you wouldn't. But then you are receiving income. And that income would be subject to your normal income tax in most cases. Again, not tax advice. So that might be a good thing. But also you are taking counterparty risk. So when you're receiving this interest, those coins are being lent, those Bitcoins are being lent, and therefore and as I talked about in the third video, when I went through the 5 investment strategies for my retirement plan B, you probably don't want to put all of your Bitcoin into that strategy because you are exposing yourself to one counterparty risk, one lending risk, and therefore you're exposing yourself. If that doesn't work out, if it blows up, you've lost all your Bitcoin. And the game is making sure that you don't end up with no Bitcoin, as so many have over the decades. I'm not saying that BlockFi is a bad platform. It's just about risk management and understanding that at that stage, you're not holding your Bitcoin, you're lending your Bitcoin, you're taking risk with it. And therefore, you might want to have a risk managed approach to that rather than just putting all of it in and hoping and praying. Next question.
Okay, another question. The second question, with 17 upvotes from Anonymous: are price targets above 200,000 realistic? I don't see institutional investors' fear of missing out.
So it's a question about price. I don't normally give price forecasts, but the way that I think about price is as follows. Bitcoin is priced based upon supply and demand. The supply is shrinking. Well, it's a fixed supply. And every 4 years and every 10 minutes new Bitcoins get created. And every 4 years, the number of Bitcoins that get created halves. And we've approximately approaching 19 million Bitcoins that have been created. And there's only ever going to be 21 million. So we've got 2 million to 2.5 million of Bitcoins still to be created. So most of those Bitcoins have been created. Then what happens? A bunch of people lose them because they don't secure their private key. So that shrinks the supply. And more people each year realize that the utility of Bitcoin is the ability to own your own money, spend your own money, and counter excessive money printing and the ice cube effect of the world's largest regulated Ponzi scheme called traditional money and fiat money. And so could the value of Bitcoin, could the demand for Bitcoin, think about it, reach 200,000 in order to persuade people to sell some of their Bitcoins? Because that's all the price of Bitcoin is. It's a price at which you can persuade people to sell some of their Bitcoins. And as more and more institutions come in, they're trying to protect against some of the effects of the dollar reserves or the fiat reserves that they hold. And they're making a speculative store of value decision, and most of them won't be looking to sell. And therefore, you've just got the short-term manipulation of prices because they are ultra manipulated short-term to get through. And my forecast is, why shouldn't Bitcoin be able to go past 200,000? I believe that there is more demand for it as people start to realize it, but you're going to have a longer term time frame and horizon in order to get there. And so your choice is, you either create lots of taxable events along the way and have to deal with that headache, or you decide that you're going to be a longer term investor, hold them, and then you can implement some of the better answers to the 3 questions we covered in this. Next question.
Okay, this is a question from Jay. With 12 upvotes, in Austria and Germany, holding crypto over 1 year makes it tax-free. Do you think such regulations will be lifted for the cash grabs you were talking about?
So I believe that, well, firstly, I don't see any immediate reason to think that they will do that. But the trend is simple. And when I wrote the book, Bang to the Future, Protect Your Future Before Government Go Bust, I talked about 5 outcomes based upon the fact that we're operating the world's largest regulated fiat Ponzi scheme. And I talked about the Great Depression of the 2020s. And the reason I did that is the 5 outcomes are that we would have to have a radical reform of our financial system and our banking system because money is created as debt and there's not enough debt, and its basic economics states that you have to have a reform. If you don't have a reform, then you have to have products like central bank digital currencies come in order to create a new money supply. Or you have to move towards communism, which is essentially a form of 100% tax and illegality of private ownership. I think you'll have not straight out communism, but you'll have a hybrid model where taxes are going to go up and up and up. So in answer to that question, every single government will be implementing new ways of taxing, removing old ways of taxing, and trying to remain competitive while increasing the amount of tax as we gradually shift towards this socialism, much higher expenditure, and trying to get on the right side of these regulated Ponzi scheme trends. So from my perspective, tax globally goes up. And so therefore jurisdictions like Germany, I wouldn't be very surprised if they change those things in order to go through the tax grab, but there's nothing that's giving the indication they will at the moment. There is consequences as well. Next question.
Okay. Anonymous asks, and that's got 12 upvotes. What are your thoughts on what US Treasury Secretary Janet Yellen said about Bitcoin? It is an extremely inefficient way of conducting transactions. Simon.
So Janet Yellen, in terms of that particular comment, so I'll isolate it to that comment. It depends what type of transactions you want to make. So if I have a transaction that involves censorship, i.e. if I'm trying to contribute to a perfectly legitimate organization like WikiLeaks or something, then it's a very good way of transacting. If I want to send a large amount of money internationally and overseas, then it's a very good way of transacting as long as we're not committing illegal activities, because if you are committing crime with Bitcoin, I think it's a pretty bad way of transacting because you create an immutable record on a blockchain that is pseudonymous, but later they can connect that transaction to you, you don't have any plausible deniability. So it is a bad way of doing that. If you're talking about buying your coffee using Bitcoin, then it's inefficient because the design of Bitcoin is that it increases in value and increases your purchasing power over time, where the dollar is very efficient because it decreases your purchasing power over time. So if you own fiat money, you want to spend it as fast as possible before it goes down and depletes your savings over time. And so by having fiat currencies that go down in value, they create very efficient units of account and median of exchanges. By having money that increases your wealth over time, is better for your savings. And there's something called Gresham's law. And Gresham law states that good money crowds out bad money. And so you try and spend your fiat money as fast as possible, and you try and hoard. And this is why in the last Great Depression, the US government decided gold is such good money that we need to make hoarding of it illegal because we want people to spend and not save. And so that's what you got to read between the lines. And I think one of the things I should do is when I went through the IMF video, the announcement when they were looking for Bretton Woods 2, I paused the video and talked and interpreted it. I think we should do similar things for Janet Yellen. And so, yes, that's what if you can read between the lines, she has framed a very positive thing in a negative light. And there is also lots of innovation to improve the inefficiencies that she might be referring to there. But remember, this is the champion of the dollar, so she can only say bad things about Bitcoin, just like Trump could only see bad things about Bitcoin when he was president, because his job is to protect the dollar, because the dollar is what gives the US its power as the most important economy in the world and the world reserve currency, because it's protected by international, just like the last currency, pound, was backed by the naval fleet. It's backed by the largest defense spending budget in the world and foreign military bases all around the world. So that needs to be protected in an inevitable shift that is coming as the dollar moves and shifts its status as reserve currency.
Okay, I think this is the largest amount of people that we've had in a while. We've got over 1,200, just almost 1,200 people watching.
Awesome. Okay, thank you, everybody. Do me a favor. We'll answer more questions, but we'd like much more people. We think it should be 10,000 people watching these things. The only way we're going to get there is if you could support us. So if you like what you're hearing, give us a like. YouTube gives us more love. More people see it, share it, and subscribe so that we can get the message out there. Thank you very much. Next question.
Okay, I think everyone's getting in the swing of this Slido thing. It's the first time that we're doing it with the live AMAs.
Okay, shout out to Andreas Antonopoulos that introduced us as well. So thank you for introducing us to Slido.
Yep, definitely. Okay, can you see the screen there? The question?
Yeah, I can see that.
Okay, so the question from why did you buy that furniture? Somebody called themselves, why did you buy that furniture? With 15 upvotes, the question is, why did you buy that furniture?
So I've got a period Georgian house, and I like to only purchase furniture that is, love it or hate it, art pieces. And if I'm going to buy furniture, I don't want something that's going to go down in value. I'd rather something that acts as a store of value. And because we're in my home and home studio, we wanted things that actually match the keeping. So we got period furniture throughout the house, and this just matches. And also, I believe that gold is a great store of value. So if I am going to be making purchases for furniture, I want things that are going to be worth more in the future or preserve purchasing power. Thank you for the question.
Next question from Gary Fitzsimmons with 13 upvotes. Is it a good idea to sell your Bitcoin at the cycle peak, so when Bitcoin retraces by up to 80% during the bear market, you can potentially double your stash?
If you could do that, then it would be a good idea. But the reality is that 90% of traders lose money, get it all wrong. The emotions of fear and greed mean that they end up buying high and selling low. They buy at all-time highs and they sell at capitulation at the bottom. You create taxable events for yourself, and 90% of traders lose money. And because you are probably not an insider, and short-term markets are 100% manipulated, and most people have a completely stressful life trying to call the tops and trying to call the bottoms. If you wanted to say, what should I have done? Well, what you should have done, with hindsight is perfect, perfect 2020 vision, is you should have bought a laptop in 2009, and you should have taken that and invested in mining Bitcoin. And then you should have held that all the way through until approximately the Ethereum ICO. And then you should have taken all your Bitcoin, bought it into Ethereum. And then you should have taken all your Ethereum, sold it after the ICO bubble. And maybe you put a bunch of money into a bunch of ICOs, and then you sold those at the peak of the ICO bubble, put it all into Tether. And then you took your Tether and you sat on it. And then you waited for the crash and you bought some exchange tokens. And then with those exchange tokens, you converted those into Bitcoin at the exact right time, and then you would be a multi-gazillionaire. But the reality is that no one did it. No one has perfect foresight. And therefore, because of that, the theory of selling at the top and buying at the bottom is a good one, but most people won't be able to do it. And you create those taxable events. So you need to think about planning that if you're doing that, and making sure it's done in a wrapper and a structure that allows you to do that. I think there's better strategies. And if you go to retirementplanb.com, there's 4 videos in which I created and shared exactly the strategies that I use rather than taking the trading approach. Next question.
I think it's a good opportunity as well. You've mentioned about the 4 free videos, but there are people who've I've been getting a lot of emails. In fact, we're getting them daily, where people are wanting to know if there's going to be another opportunity for the Retirement Plan B, the online coaching program.
Yeah, so we took on 500 customers, and we had to stop because we couldn't handle anymore. And so people can pre-register. There's a page there, and people can pre-register, and we'll notify you. But at the moment, we don't have plans, but make sure you're on that list, because yeah, we're getting a lot of emails, and we'll probably make some online version at some point. But right now, we're just focused on making sure that the first set of clients that we took on implementing their Bitcoin Retirement Plan B, and they actually have all the tools and everything they need before we bring on any more.
And where can people find your free book? It's the free digital copy that they can download, isn't it?
Yeah, so the book that I talk about, which was the very first published book in the world to include Bitcoin, Bank to the Future, Protect Your Future Before Governments Go Bust, is now available completely free to download. Just go to retirementplanb.com/book, and you can register there and get yourself a digital copy of the book, and some videos that go with it to say things that have changed, because that was written approximately 10 years ago, but the lessons are completely preparing you for today's. And if you've read that book, give a shout out in the comments and let people know what you thought. And also, if you do read it, I'll ask you one thing. Just stick if you have time, just put a review on Amazon. I'd really appreciate it as a token of gratitude if you enjoyed it. Okay, let's take some more questions, Azad. I think we've got another, we've only got another 5-10 minutes. 5 minutes.
Yep. Okay. We were a couple of minutes late starting, so I guess we can go over slightly if you're okay with that.
Okay.
All right. Okay, so we answered that question from Gary. Next question is from Anonymous with 9 upvotes. Should I not sell on the cycle or should I wait for the next one?
Similar question. So you just got to consider your taxable events. And if you think you can forecast cycles, but most people can't.
Okay, next question from Sean with 9 upvotes. What's your thoughts on the current government action on Bitcoin in India?
The Bitcoin in India story has just been going on forever. We've seen it all before. And on my YouTube channel, check out an interview I did with Sunny Ray, the co-founder of Uno Coin, which is the largest exchange in India. And we went through the whole story for about 90 minutes if you're really interested in the India story. I also created a video called The Indian Financial Crisis, where I went through some of the trends in India and some of the IMF and World Bank loans that they were taking out really early in the pandemic cycle. And yeah, it's just bad decisions that will be reversed eventually. And India have been flip-flopping with this one for an incredible amount of time.
Oops. Right, so next question we have got from Trev. Are you more bullish on Ethereum this year, BTC or DeFi?
So in answering that question, in terms of bullish, I can only answer that in terms of risk adjusted. So if you said to me, I can only hold one asset, then I would hold Bitcoin and I'd expect lower returns than Ethereum. because I'm not just analyzing in terms of returns, I'm analyzing in terms of risk. If you want to go further and further out the risk curve, then just take the craziest cryptocurrency out there, Dogecoin, and it's been the highest performing cryptocurrency. Because returns is not all we consider, it's risk adjusted. Ethereum is going through a shift from proof of work to proof of stake, which means that it's infinitely more risky than Bitcoin because it's changing the whole model. And a million things can go wrong in that stage. So you'd expect higher returns for taking higher risk, just as if you bought Dogecoin, which has an infinite supply, zero use case, and is a joke coin, you'd expect higher returns because you're taking a much, much higher risk. So returns is not the indicator of how you should be analyzing these things. In terms of DeFi, I created a video 2 weeks ago on my outlook for DeFi in 2021, and I expect a regulatory crackdown in 2021, especially around a lot of the tokens that are being issued at the moment, which I think is around the corner at any stage now. So that could happen at any stage. But as a concept, I love the thought of creating DeFi, but I think really, if you think about it, Bitcoin is the world's best shot at ever achieving digital hard sound money. Ethereum has become a protocol for building such financial innovation and other products. And DeFi, really the primary use case is circumventing KYC. So it's interesting how we're going to see governments react to that. But I did a whole video on that a couple of weeks. So check out that video if you're interested in that subject.
You okay for another 5 minutes, Simon?
Yeah, we'll do the final question. How many upvotes have we got on the top one?
Let's just do that. A question from, we answered that. Are you more bullish on Ethereum this year, BTC or DeFi?
Is Slido doing that double thing again?
Yeah, he's doing that double thing, yeah.
Okay, let's take the next one.
Okay, so a question from Anonymous with 7 upvotes. So CoinShares and Fidelity talk about a 1 to 5% allocation in the 60-40 portfolio. What does a 60-40 person rebalance to when the 5% allocation has grown to 30%?
The answer to that is it's different for every person, and I need to understand way more about you. I'm not your financial advisor, but I did do all my financial advisory qualifications. And one of the things that whenever we're working with clients at Retirement Plan B is we make sure that they put together a good deal of time on their financial plan, their stage of life. And then once they've got all that together, they then can start thinking about portfolio optimizations, allocations, strategy mixes, rebalancing, and all the other things around that. But there's no way that there's a generic advice for everybody. Portfolio construction is really about your personal financial situation and understanding your goals and aspirations, your financial needs in the future. So you can't really give those generalized advice. But in terms of my allocations, then that was covered in the Retirement Plan B free video series. So head over to retirementplanb.com if you're interested in that. And that is going to wrap it up for this week. So a few requests. Let us know what you think about the new Slido format. Is that better than what we've done in the past? Use the live chat, use the comments, and let us know what you think. I think it worked a bit better because at least we can pick out questions based upon the maximum amount of what people are looking for. So thank you, Azad, for suggesting that and pulling that together last minute for us. Also, if you enjoyed this video, we do want to go from, we've gone from 6,000 to 60,000 subscribers. I want to go from 60,000 subscribers to 600,000 subscribers. So the only way we're going to get there is with your help. So please do like, please do share, please do subscribe, and we can make sure that we get this out to as many people as possible. Because always remember, you are alive at one of the most interesting and exciting times in financial history. Change is inevitable. I want you to be on the right side next week for the next topic. And please do like, share, subscribe. Peace.